Your finger hovers over the mouse. The chart glows before you, candles dancing their familiar rhythm. Deep in your gut, something whispers, don't. But louder than that whisper is the pull, the magnetic force of possibility, of redemption, of proving you were right all along. Click. The trade is live, and instantly you know you've done it again. Don't wait, and support the channel by liking and subscribing. It really makes a difference for our development. This moment, this exact feeling of regret washing over you as the position moves against you, this is where real trading education begins. Not in the textbooks or YouTube tutorials, but in the raw honesty of recognizing that your greatest enemy isn't market volatility or economic news. It's the voice in your head that convinced you to ignore every rule you've ever learned. The market isn't your opponent, your psychology is. And until you understand this fundamental truth, every strategy you learn, every indicator you master, every pattern you memorize will crumble under the weight of your own emotional impulses. Let's dive deep into why even the smartest traders sabotage themselves, and more importantly, how you can finally break free from this destructive cycle. At SMB Capital, they drill a fundamental principle into every new trader's mind. One good trade becomes their mantra, something they write down, repeat, and ultimately build their entire professional identity around. The reasoning is simple. Focusing on a single quality trade means accomplishing more than most traders achieve in an entire month. Let me share a story about a trader who joined SMB. He was brilliant and intensely driven, coming from a technology background. He was a meticulous professional who coded complex indicators, rigorously back-tested trading models, and simulated thousands of potential market setups. Yet despite all this preparation, his profit and loss statement remained consistently in the red. The problem wasn't his technical skills, but his psychological approach. He was trading to prove something to himself, not to grow as a trader. His motivation stemmed from wanting to feel intelligent rather than following a structured methodology. Each loss felt like a personal assault on his ego, while every win seemed like a validation of his self-worth. Imagine trading as if it were a high-stakes final exam where every single decision determined your entire professional GPA. The emotional roller coaster was exhausting and ultimately self-destructive. Then, a coach intervened. The advice was deceptively simple. Forget about your overall performance and just focus on making one good trade per day. If the trade meets your predefined rules, it counts. If it doesn't, walk away. Initially, the trader resisted this approach, but eventually he surrendered to the concept. Within a few months, his performance dramatically improved. The transformation wasn't due to changing his trading setup, but because he fundamentally changed his mindset. The core lesson was profound. You are not defined by your account balance, your last trade, or your win rate. You are a process, a system continuously evolving and improving. The professional mindset boils down to several key principles. Detach from outcomes, recognize that no single trade defines you, strictly follow your established trading edge, only execute trades within your predetermined playbook, prioritize process over prediction, celebrate discipline alongside profit, and objectively review performance without emotional attachment. This approach might not seem glamorous, but it's scalable, and scalability is what ultimately generates consistent returns. By releasing the desperate need to win every trade, paradoxically, you begin winning more trades. Desperation repels success, while a disciplined process attracts it. The critical question becomes, are you chasing the emotional high of being right, or are you committed to doing what's objectively correct? How would your trading transform if your sole daily goal was executing one high-quality trade? Are you more focused on outcomes or precise execution? Write down in one sentence what one good trade means to you. This single line will become the foundational principle of your playbook, influencing every subsequent decision. Professional traders understand that success isn't about chasing money, but about pursuing precision and process, repeatedly executing one good trade until it becomes an integral part of their identity. The common misconception is that traders can develop their skills in isolation, consuming endless videos and books, staring at charts late into the night, believing each new tweak will be the breakthrough. But consider this: would you attempt to become an Olympic athlete without a coach? Would you learn boxing alone in your bedroom and then step into a real ring? Of course not. Yet this is precisely how most traders attempt to grow. Solo, unstructured, trapped in an echo chamber, improvising in a zero-sum game where professionals are systematically trained, not just naturally talented. It's comparable to attempting a root canal using YouTube tutorials. Technically possible, but far from intelligent. Trading is a performance sport, and every performer requires accountability. At SMB Capital, traders aren't merely taught trading setups. They're coached like elite athletes with structured drills, comprehensive reviews, and constant corrections. Every trader records their screens, and each trade undergoes meticulous examination. Watched, dissected, questioned, and refined. Accountability and feedback are paramount, but the most crucial element is mirroring. The fundamental truth is that you cannot identify your own blind spots or recognize your ingrained patterns while trapped within them. A coach's role is to perceive the things you unconsciously refuse to acknowledge, preventing you from repeating the same mistakes disguised by slightly different market conditions. Consider this example. A trader at SMB had a persistent habit of cutting winners prematurely. Despite extensive journaling, this behavior remained unchanged. During a screen review, his coach paused the video and challenged him, asking why he exited at that specific point when no exit signal or contextual change was present, only fear. The trader attempted to rationalize his decision, but the evidence was irrefutably displayed on the screen. In reality, his struggle wasn't about setup complexity or lack of discipline. It was a repetitive response to momentary discomfort, a cyclical pattern. That single coaching session transformed him more profoundly than a decade of reading could. When someone else reflects your true self back to you, self-deception becomes impossible. Here's the fascinating insight. Even as a solo trader, you're never truly alone. Your environment constantly shapes your development, whether you recognize it or not. Darren experienced this lesson brutally. He traded in isolation for months, establishing solid habits, but quickly hit a performance plateau. His trading edge was adequate, but when journaling, he unconsciously deceived himself. Everything changed when he joined a remote trading accountability group, just 5 traders conducting weekly reviews and daily screen sharing. Interestingly, his win rate remained unchanged, but his discipline dramatically improved. Someone was observing him, not to criticize, but to provide honest reflection. Self-deception crumbles under shared attention. Whether you have a formal coach or not, building accountability is crucial. Record every trading session using Lum, OBS, or similar software. Find an accountability partner. Implement daily 5-minute check-ins, weekly trade review exchanges, trade swapping, and provide genuine feedback. Narrate your trades aloud during entry. Your voice exposes your true mental state. Conduct a Sunday self-coaching session. Ask yourself, if I were coaching me, what would I say? You don't need a professional trading desk. You need presence, even in a virtual environment. Consider, who's holding you accountable right now? What hidden weaknesses might be undermining your performance? How does trading in isolation both serve and limit you? This week, identify one accountability partner. Establish a simple agreement. 5-minute daily check-ins. Share one win, one mistake, one intention. You'll be astonished how rapidly self-awareness grows when someone genuinely listens. Discipline flourishes under visibility. You cannot resolve what you refuse to acknowledge, and you cannot confront what you're unwilling to see. By creating accountability, formal or informal, you escape the echo chamber and enter accelerated personal growth. With that transformation in mind, we're ready to explore the most critical shift of all, identity architecture, and becoming the trader who consistently wins. Trading isn't just something you do, it's something you become. Until you truly see yourself as a trader, your results will always reflect your internal uncertainty. The critical question is whether you approach trading like a casual experiment or a serious profession. Make no mistake, the market perceives your true commitment. Your identity seeps into every trade, revealing itself through discipline and execution. What you fundamentally believe will always triumph over what you intellectually know. Consider this. Would you willingly board a plane with a hobby pilot or undergo surgery from a part-time surgeon? Similarly, why would the market reward someone who's merely playing at trading? At SMB, new traders undergo intensive mindset training that goes beyond simple discipline. They're taught identity transformation. Each trade reinforces one of 2 personas: the amateur, who is emotional and reactive, or the professional, who is process-driven and self-aware. These microscopic decisions gradually sculpt your trading identity. The fascinating distinction lies between the amateur who remains stagnant and the amateur who evolves into a self-aware, systematic performer. Most amateur traders mistakenly believe they have a strategy problem when they actually have a self-reflection problem. They're unaware of their behavioral patterns under pressure, what triggers their overtrading, why they prematurely exit winning positions, or what psychological patterns lead to catastrophic losses. Consequently, they change strategies without changing themselves, ensuring no meaningful progress. In contrast, the self-aware trader monitors their mental state as meticulously as they analyze market charts. They understand precisely when they're likely to become emotionally compromised, which trading setups tempt them into impulsive decisions, what emotional states correlate with peak performance, and even the specific language that precedes self-sabotage. This profound self-knowledge makes them formidable. Take Eric's story, for example. He began, like many others, working a conventional job, trading part-time, obsessively consuming online forums, constantly experimenting with new technical indicators. He viewed himself as a potential hustler, a perpetual learner hoping to make it someday. And this tentative self-perception produced exactly what you'd expect: half-hearted actions and mediocre results. One day, a coach challenged Eric with a transformative question. What would change if he labeled himself a trader and started behaving accordingly? This inquiry sparked a profound shift. Instead of merely attempting various strategies, Eric developed a systematic approach. He crafted a detailed schedule and constructed a comprehensive playbook. He meticulously reviewed his progress daily, prioritizing the identity of a trader and allowing his results to gradually align with that persona. The critical element of his transformation was creating an awareness dashboard. He began tracking multiple metrics per trading session: clarity, impulsiveness, fatigue, and presence, each rated from 1 to 10. After 20 sessions, distinct patterns emerged. He gained the ability to anticipate potential mistakes before they occurred. 3 months later, he achieved his first 5-figure month, not through increased intelligence, but by gaining clarity about his evolving identity. Building a trading identity requires deliberate steps. Start by writing a clear identity statement. Analyze your recent trades comprehensively. Label each trade's characteristics: revenge trades, impulsive entries, hesitant setups, premature exits. Implement behavioral triggers based on these insights. Establish rules like pausing for 10 minutes if clarity drops below 5, reducing trade size during impulsive moments, and narrating trades when overconfidence is detected. Conduct a daily identity audit. Evaluate whether your trades genuinely reflect your stated identity. Remember that identity without awareness is directionless, and awareness without identity lacks purpose. Reflect on critical questions. What words truly describe your current trading approach? What patterns would an experienced coach immediately recognize in your behavior? Identify one specific behavior that contradicts your stated identity. Develop a simple identity statement and select a metric to track. For instance, I am a trader who prioritizes rules over impulses. Monitor your impulse score per session. The essence of becoming a trader isn't about monetary success, but about consistent, disciplined behavior. Combining identity with self-awareness creates an unstoppable trading approach. The ultimate test comes when challenged to demonstrate your best trade setup. Can you confidently pull up a chart, articulate the context, define risk parameters, explain entry triggers, and walk through your exit strategy? Or would uncertainty cause you to hesitate? Would the strategy lack precision? Because if it's imprecise, it can't be replicated. And if it can't be replicated, it's unprofessional. That's where a comprehensive trading system becomes crucial. This system isn't just a collection of random ideas. It's a personal trading methodology, a competitive advantage that's clearly defined, documented, and ready for implementation. Picture a chef attempting to manage a restaurant without standardized recipes. They might be skilled at cooking, but can they expand? Can they train others? Can they maintain consistency when exhausted? That's the critical distinction. Here's the typical mistake most traders make. They pursue trading setups like fleeting distractions. One moment, they're chasing breakout strategies. The next week, they're exploring reversals. Then they jump to cryptocurrencies, options, scalping, futures. Months later, they're completely drained, yet they remain inconsistent. The fundamental problem, they never developed a solid, comprehensive blueprint. The trading playbook resolves this challenge. At SMB, every developing trader constructs their playbook methodically, page by page, setup by setup, not through theoretical concepts, but using actual trades with detailed screenshots and in-depth post-trade analyses. One trader, whom they'll call Maya, exclusively focused on opening drive reversals. She deliberately avoided diversifying her approach. Within her playbook, she meticulously documented perfect trade examples, contextual notes, volume dynamics, prior day levels, market trends, entry conditions, price action signals, confirmation triggers, risk management rules, position sizing strategies, stop placement, exit methodologies, partial profit taking, trailing techniques, target identification, common mistake patterns, prohibited actions, self-evaluation, and her emotional state before and after each trade. She would conclude with a single sentence capturing her key learning. This specialized setup generated over $250,000 in her second year, not through trading everything, but by mastering one specific strategy. What distinguished Maya was her comprehensive approach. She didn't just document a single version of her setup, she analyzed it from multiple perspectives. Her four-dimensional playbook explored directional variations, long versus short versions, different behavioral patterns, varied management approaches, contextual nuances, market behavior during trending and range-bound conditions, technical versus news-driven scenarios, temporal variations, opening phase dynamics, midday setups, closing market characteristics, and psychological dimensions. She examined who might be trapped, identified potential pain trades, and understood where market participants might panic. The same setup name revealed 4 distinct personalities, all meticulously documented. Your playbook serves as the foundation for developing true mastery. Here's a structured 90-day system for building it. The first 30 days focus on creating a comprehensive foundation document. You'll develop 3 A+ setups, giving each a clear identity and context. This means defining the market environment, precise entry criteria, exact triggers, risk protocols, stop placement, position sizing, exit strategies, and potential targets. You'll also track mistakes, common errors, and your emotional state during each trade. The approach involves documenting 1 setup per week, ultimately creating 3 fully developed trading strategies. During days 31-60, you'll explore deeper dimensions of each setup. This means investigating the opposite direction versions, examining different market contexts, analyzing time of day variations, and understanding the psychological dynamics at play. The final 30 days are dedicated to refinement. You'll focus on live trading these playbook setups, documenting every single instance and tracking success rates across different variations. By meticulously tracking data, you'll continuously refine your rules and approach. By day 90, you won't just have a collection of notes. You'll have crafted a precision instrument for trading. The goal is to create documentation so detailed that another trader could replicate your exact approach just by reading your notes. The key is to dig deep. Ask yourself tough questions. Do I truly understand my setup, or am I just making assumptions? What variations am I avoiding documenting? Those unexplored areas often contain the most valuable insights. Great traders don't just accumulate setups, they master them from every possible angle. Depth always trumps breadth. Your playbook is more than documentation, it's a visible representation of your trading DNA. Build it with the same intensity you'd apply to your entire career, because in many ways, that's exactly what you're doing. The critical question remains, do you really know what you do when you trade? Not just the surface level actions, but the entire psychological and behavioral landscape surrounding your trading decisions. Imagine discovering the stark truth about your trading, much like watching an embarrassing dance video. That's the power of self-reflection. At SMB, traders have a transformative 2-part system that reveals hidden truths. Part 1 involves video truth. Traders record every trading session and meticulously review their performance, frame by frame, click by click. This honest mirror exposes mental patterns invisible during live trading. Take Marcus, for example. He believed his problem was entry timing, but when he rewatched his footage, he uncovered a different issue. Whenever he had a small winner, he would hesitate to re-enter the same setup. Why? Pure fear. He was protecting his ego instead of executing his trading strategy. In his mind, his behavior seemed rational, but on video, it was clearly fear-driven. Part 2 focuses on the evolution loop. Recording isn't enough. You need a systematic approach to transform observations into growth. Trading doesn't inherently improve your skills. Reviewing does. Each trade generates data, but without a feedback mechanism, that data remains meaningless. Alex experienced this firsthand. He used to end weeks frustrated, blaming the market for his losses. Then he implemented a comprehensive review system. His approach involved daily and weekly assessments, categorizing mistakes into setup and execution failures. His process was simple, yet powerful. Daily, he'd spend 10 minutes rating his session's quality, tracking setup discipline and emotional control. Weekly, he'd spend 30 minutes reviewing flagged trades, asking whether his actions were strategic or ego-driven. Monthly, he'd conduct a 60-minute comprehensive review, updating his playbook with new insights. The result? After just 3 weeks, his bad trades dropped by 70%. This wasn't due to market changes, but because his self-awareness had dramatically improved. Celebrate process improvements. Adjust risk and goals if needed. The magic questions. After each review, ask yourself, what did I think I was doing? What was I actually doing? What would I tell someone else who did this? What's my commitment for next time? The gap between the first two questions. That's where your competitive advantage lies. This week, record at least one trading session. Watch yourself trade one position. Write what surprised you. Make one micro adjustment. Start small. The habit matters more than perfection. Reflect on the truth about your trading and your avoidance. If someone else watched your trades, what would they notice immediately? Are you reviewing to improve or just to feel productive? The best traders don't have the best setups. They have the best self-awareness, and self-awareness comes from evidence, not opinion. Your memory tells stories. Your video tells truth. Your review system turns truth into transformation. Combine all three and you become unstoppable. But what happens when you see the truth and it hurts? The wisdom of losses. Learning from pain. Let's get this straight. You don't learn much from winning, but you can learn everything from losing. If you know how to look, most traders fear losses. They avoid them, hide from them, blame them. They'll say it was a fake out, a manipulation, or just bad luck. Like blaming the rain for getting wet when you forgot your umbrella. The rain doesn't care about your plans. But here's the deeper truth about trading pain. Becoming a professional trader isn't a glow up. It's a breakdown, followed by a rebuild. This path isn't glamorous. It's screen fatigue at 1 a.m. It's losing money the right way and still feeling like a failure. It's your friends not understanding. It's your family asking why. It's uncertainty every single day, and the pain isn't just about losing, it's about who you become in the process. Let me tell you about two traders who learned this differently. Daniel's journey of learning from losses began in his third month at SMB. 7 red days straight, almost quit, thought he was regressing. His coach made him sort every loss, setups that failed, market didn't cooperate, trades he failed. He didn't follow rules. Results. 3 were textbook losses. Part of the game. 2 trades were emotionally driven. 2 were win-seeking moves outside his standard approach. The moment of clarity transformed everything. He wasn't broken. He had simply drifted from his process. Jordan tightened his focus, adjusted his risk. The cold streak ended because he evolved. Learning from pain. Month 1, excitement. Month 2, confusion. Month 3, fury. Month 4, numbness. Month 5, profitability. What changed? Not his strategy, his relationship with discomfort. He stopped trying to escape the pain. Instead, he started learning from it. Every single day, same setup, same risk, same discipline. No heroic moves, no panic, no ego. The pain wasn't punishment, it was purification. This is what separates those who quit from those who thrive. Quitters believe this shouldn't be so challenging. They think, maybe I'm not cut out for this after 6 months with no progress. To them, pain means failure. Survivors understand differently. Trading is supposed to be hard. You're rewiring decades of ingrained patterns while real money is at stake. Slow progress remains progress. Pain signifies growth. Your pain navigation system requires careful cultivation. Create a loss archive. Screenshot clean losses. Recognize a good trade with a bad result. Study what the market was teaching. Look for environmental changes you might have missed. Track pain patterns. What hurts most? Being wrong, losing money, missing opportunities. When do you feel most vulnerable after losses during drawdowns? When others succeed, how do you respond? Revenge trading, shutting down, overtrading, reframe your timeline. James nearly quit after 10 months of losses, then realized the only difference between him and professionals, they endured longer through the same pain. He gave himself 12 more months, not to get rich, but to become consistent. He's still trading full-time now. Extract the lesson. Every painful moment teaches something. A loss that taught patience. A drawdown that revealed over-leveraging. A mistrade that exposed unclear rules. A tilt session that uncovered ego. Write these down. They're more valuable than this week's performance. Do something radical. Take your most painful recent trading memory. Write what it taught you. Thank it. Genuinely. Share the lesson with one person. Pain shared becomes wisdom multiplied. Ask yourself, what story do I tell myself when trading hurts? Do I run from pain or study it? What would change if I saw pain as education? The market isn't about punishment, it's an educational platform. Sometimes the most costly lessons are precisely what make you profitable. Losses and data are forms of feedback. Together, they become your most powerful teachers. The real question isn't whether trading will hurt, but whether you'll allow those experiences to foster your growth. Your most significant adversary isn't the market, it's your own nervous system. When you're trading, your body can't distinguish between market interactions and being hunted. Your heart rate spikes, breathing becomes shallow, and cortisol floods your system. Logical thinking in the prefrontal cortex goes offline, while the amygdala, driven by fear, takes control. This isn't a sign of weakness, it's pure biology. Until you comprehend this mechanism, you'll continue losing to an invisible opponent. Consider Leo's case. He possessed every trading tool, clear setups, risk management rules, daily journaling, and even meditation practice. Yet after 2 consecutive losses, he'd invariably execute a revenge trade with doubled position size. During video reviews, the pattern became glaringly apparent. First loss, slight tension. Second loss, clenched fists and a forward lean. Third loss, rapid breathing and an instant trade execution. His conscious mind insisted on following rules, but his nervous system screamed danger and demanded immediate retaliation. Predictably, the nervous system emerged victorious. Your trading biology is running software developed 200,000 years ago. In prehistoric times, hesitation meant death, while quick action ensured survival. Resources were scarce, so the immediate imperative was to recover losses instantly. Sound familiar? This is the root of revenge trading, FOMO, and the inability to accept drawdowns. It's not a character defect, it's ancient programming operating in a modern context. The solution isn't battling your biology, but collaborating with it. The key is a nervous system toolkit, recognition before regulation. You can't modify what you don't acknowledge. Build awareness of your physical state through zone recognition. Green zone, calm, relaxed shoulders, steady breathing. Yellow zone, alert, slight tension, accelerated thoughts, and red zone, clenched muscles, shallow breathing. Checking your zone before each trade becomes a physiological reset mechanism. When you spot a yellow or red zone, practice box breathing. 4 to 4, 4, 4 rhythm. Breathe in, hold, breathe out. Hold, expand your peripheral vision. Scan the screen's corners for 10 seconds. Use cold water, splash it on your face or your wrists. Get moving, stand up and do 5 squats. These aren't just suggestions, they actually modify your brain chemistry. Before entering any position, perform a state check. Determine which zone you're in. Set an intention, enter because of edge, not emotion. Focus on breath. Take 3 deep breaths. Adjust your posture. Sit back. Drop your shoulders. This becomes your pre-trade ritual. Like a boxer preparing to enter the ring. Track the biological journal alongside your trades. Assess your physical state before entry. Rate tension from 1 to 10. Observe your breathing pattern. Is it shallow or deep? Note your body position. Are you leaning forward or relaxed? Examine your post-trade physical response. After 20 trades, patterns will emerge. You'll observe how your body trades before your mind does. An advanced technique involves HRV training. Some traders use heart rate variability monitors. They only trade when HRV indicates parasympathetic dominance, a calm state. It's like having a biological trading indicator. Remember the earlier example? She added one rule: no re-entry until breath stabilizes for 10 counts. That biological checkpoint disrupted her revenge pattern. A calm body makes better decisions than a triggered one. Tomorrow, conduct this experiment. Set a timer for every 30 minutes during trading. When it sounds, rate your physical tension from 1 to 10. Record what happened in the market just before. Look for correlations between market events and bodily responses. You'll be surprised by your discoveries. Reflect on which market events trigger your fight or flight response. Can you catch yourself shifting zones before making poor trades? Imagine trading only from the green zone. Your mind might understand the setup, but your body pulls the trigger. Master your physiology first. Psychology will follow. Elite traders aren't emotionless. They're just quicker at recognizing and regulating biological responses. Your body sends signals all day. The question is, are you listening? Now let's explore measuring the right kind of success. Consider this. When did you last celebrate a perfect losing trade? When did you last feel guilty about a profitable mistake? Most traders have their success formula completely backwards. They equate a green day with being a good trader and a red day with being a bad trader. This mindset programs them for dangerous patterns, sloppy winners that reinforce terrible habits, perfect executions that feel like failures, desperate profit chasing, and ultimately abandoning their process. The critical mindset shift is understanding that process is the actual profit, and money is merely the scoreboard. You can't control profit and loss, but you can control setup quality, risk discipline, emotional regulation, and review consistency. These elements compound predictably, while random profits do not. Consider Rachel's transformation. She experienced 3 consecutive weeks of red trading days, yet every single trade was executed perfectly. Clean entries, proper stops, and calm execution. She felt devastated, believing she was failing despite doing everything right. Her coach provided crucial perspective. She wasn't failing. Her process was simply ahead of her results. In week 4, she suddenly went deep green, and she changed absolutely nothing. Time had simply caught up with her consistent process. This was her most profound learning moment. The market pays randomly in the short term, but rewards process in the long term. To rewire your success system, create a daily process scorecard. Rate each day on controllable factors. Set up quality from 1 to 10, execution precision from 1 to 10, emotional mastery from 1 to 10, and learning extraction from 1 to 10. Your total daily score out of 40 becomes your real performance metric. The key is immediately rewarding the right behaviors. Skip a B setup trade and stretch in the sunlight. Follow a stop perfectly and note it in your journal. Stay calm during drawdown and text your accountability partner. Complete your daily review and enjoy 10 minutes of something you love. This might sound silly, but it's neuroscience. You're literally reprogramming what your brain considers success. By consistently focusing on process over outcomes, you're training yourself to become a more disciplined, effective trader. Here's the rewritten fragment maintaining the original's flow and details. Journal how this transforms your trading psychology. Observe what unfolds when you release the need for every trade to succeed. Advanced process tracking becomes crucial. Create a process equity curve starting at 100 points. Each day you score 30 or more out of 40. Add 2 points. Each day scoring under 20 out of 40, subtract 2 points. Plot this daily progression. Most traders discover their process curve predicts their profit and loss curve by 2 to 4 weeks. When the process equity trends upward, profits follow. When it trends downward, losses approach. The real beauty lies in immediate process correction. Randomness cannot be fixed, but process can. Today, identify your primary process weakness. Common issues include entering before full confirmation, adjusting stops mid-trade, increasing position sizes after wins, or skipping daily reviews. Select one issue. Track it meticulously for 5 days. Reward yourself for each day you successfully address the leak. Reflect deeply. What process habits would emerge if profit and loss were hidden for 90 days? Where am I compromising process for potential profit? How would my trading transform if execution quality was my sole focus? Amateur traders chase outcomes. Professional traders, perfect process. The market eventually rewards those who deserve it. Deserving stems from process, not luck. Market returns are uncontrollable, but personal deservedness is within your power. Focus on earning through process. Rewards will naturally follow. Process carries immense power. But what about maintaining composure under intense pressure? Mental conditioning separates traders who crumble from those who excel in chaos. It's not about strategy or experience. It's about psychological resilience. Consider elite performers. Navy SEALs don't merely learn to shoot, they master precision under extreme conditions. Surgeons don't just know procedures, they perform flawlessly amid high-stakes environments. Trading demands identical mental training. Knowing a setup means nothing without execution when it truly matters. The distinction between survival and thriving lies in deployable mental tools. Your mental edge toolkit becomes your lifeline. Morning mental preparation is critical. Before markets open, you're either strategically priming for success or passively hoping for luck. Visualization, sequencing, and maintaining a positive mindset become your 5-minute gateway to performance. I'll focus on creating a smooth, natural narrative flow while preserving the original content's essence. Visualize your trading setup taking shape. Wait with patience. Enter the market calmly and professionally. Review your positions objectively. This isn't about prediction. It's about rehearsing excellence just like Olympic athletes prepare. Breathing is your fundamental psychological anchor. Before every trade, practice the 4-4-4-4-4 box breathing technique. Check your breathing. Are you breathing from your chest under stress or from your belly in a calm state? Take 3 conscious exhales, making them longer than your inhales. Only enter a trade when your breath is steady. This isn't mystical thinking. It's pure biochemistry. Slow breathing activates your parasympathetic nervous system, which leads to better decisions. When emotions surge, your internal dialogue becomes chaotic. You start thinking, I need this win, or I can't take another loss, or everyone else is making money. Interrupt these spiraling thoughts with spoken truth. Acknowledge, I'm feeling FOMO, not seeing a clear edge. This emotion is data, not direction. I trade my plan, not my feelings. Speaking aloud engages different brain regions and breaks the emotional loop before it transforms into action. After intense trades, you need a reset ritual. Winners and losers both accumulate psychological residue. Take a 90-second reset, save and close your chart, stand up and do 5 squats. Drink water mindfully, write one line reflecting on what the trade taught you, return to your trading fresh. This prevents winning streaks from breeding overconfidence and losing streaks from triggering revenge trading. When high-pressure moments arrive, key levels, news events, significant trade sizes, follow the pressure protocol, breathe, check your method, verify your breath, steady yourself, review your rules, what's your plan, label your emotion, does this fit your trading playbook, pause, count to 5, then execute. With practice, this becomes automatic. Mental conditioning isn't about willpower, it's about systematic training. Consider Serena's transformation. She broke a destructive pattern by implementing a simple 60-second protocol. Before re-entering a trade, she would take 10 belly breaths and write down her trade rationale. Your 30-day mental training begins with week 1, breath mastery. Practice box breathing 3 times daily, not just while trading. Pay attention to your breath pattern before each trade. Assess your calmness on a scale from 1 to 10 before clicking. In week 2, introduce visualization. Spend 5 minutes each morning rehearsing success. Picture yourself handling losses with professionalism. Visualize following rules under intense pressure. Week 3 focuses on verbal tools. Articulate your emotions before trades. Use circuit breaker phrases. Observe your process while trading. Week 4 is about full integration. Complete a comprehensive pre-trade ritual. Reset after every position. Apply breathing techniques during high-pressure moments. By day 30, these won't be techniques anymore. They'll become part of your identity. Choose one mental tool and use it for every single trade tomorrow, without exception. Track the difference in your decision quality. Start with breath, as it forms the foundation for everything else. Reflect on critical questions. What mental state generates my best trades? How can I access that state on demand? What would transform if I possessed unshakable calm? Your mind isn't static, it's malleable and trainable. Traders who invest in mental preparation consistently outperform those who only study charts. Professional athletes incorporate mental training. Elite performers leverage these tools. Trading follows the same principle. Your edge isn't solely in analysis, but in executing that analysis under pressure. Mental tools bridge the gap between knowledge and performance. Embrace these tools or surrender to emotional impulses. You have the resources. Now it's about implementation. Let's discuss staying power. Section 11 explores the survivor's edge and why endurance trumps raw talent. Let's be brutally frank. Most traders don't fail due to lack of intelligence. They fail because they abandon their journey prematurely. The market remains undefeated in eroding confidence. Without understanding why staying power matters more than talent, you'll become another casualty. Here's the unspoken truth about trading survival. The market tests patience more rigorously than skill. You might possess the perfect strategy, ideal setup, and comprehensive training, but without psychological endurance, none of that matters. Why do most traders quit? The inner dialogue of defeat consumes them. 6 months of losses breed self-doubt. Maybe I'm not meant for this, they think. Everyone else seems to progress faster. This feels like sophisticated gambling. External pressures compound the challenge. Family questions the legitimacy of your pursuit. Friends fail to comprehend your chosen path. Social media bombards you with everyone else's victories while you're struggling to learn. The emotional drain is intense. Trades that seem right end up losing, while wrong trades somehow win. You watch perfect setups sail past, missed opportunities mocking you. It feels like you're running on a treadmill, going nowhere. But here's the crucial difference between those who survive and those who become mere statistics. Understanding the trading timeline. Trading isn't a straight path. It's a journey with distinct phases. Phase 1 is unconscious incompetence, spanning the first 1 to 6 months. At this stage, you don't know what you don't know. Everything seems possible, and losses feel like mere bad luck. Phase 2 is conscious incompetence, lasting from 6 to 18 months. Now you realize how much you truly don't understand. Everything feels impossible. This is the critical phase where 90% of traders give up. The challenge becomes overwhelming, and most walk away just before their potential breakthrough. Take James's story. 10 months into trading, he was still losing money. His girlfriend urged him to quit, and his parents questioned his sanity. He was on the verge of giving up. But one exhausted night, he had a transformative realization. The only difference between him and successful traders was their ability to endure through the same painful learning process. That mental reframe changed everything. He committed to 12 more months, not with the goal of getting rich, but of becoming consistent. By month 13, he broke even. Month 16 brought his first profitable quarter. By month 20, he was a full-time trader. In year 3, he was earning 6 figures, not because he was extraordinary, but because he persevered. The key is creating an anti-quit system. Define your stopping criteria explicitly, then critically examine them. Would you expect a doctor to profit immediately? A pilot to master flying in months? Why would trading mastery be any different? Measure progress beyond just profits. Track your evolution. Fewer impulsive trades, improved risk management, cleaner execution, faster emotional recovery, more consistent review. These improvements happen before financial gains. Build a robust motivation arsenal. List 5 reasons you trade beyond money: mental challenge, potential freedom, personal growth, proving capability, skill development. Review these weekly when motivation wanes. Find your survivor community. Connect with traders 6 to 12 months ahead of you. Not the Instagram millionaires, but the genuine grinders still building their path. Their real-world struggles will normalize your own journey. Embrace the challenge. Stop hoping for an easy path. Start building your resilience. The market won't become less demanding. You'll become more capable. The power of persistence compounds silently. Every month you survive, you gain something valuable. Pattern recognition develops. Emotional resilience grows. Technical skills refine. Psychological strength builds. These improvements accumulate invisibly. Then suddenly, profitability emerges. Not because of a hidden secret, but because you endured long enough for competence to take root. Create your trading survival pledge. Commit to giving yourself time to develop consistency. Measure progress beyond just profits and losses. Refuse to quit until you've truly tested yourself. Sign this commitment. Date it. On difficult days, revisit your promise. Reflect deeply. What would I lose by quitting now? Who might I become if I persisted? Is my timeline for mastery realistic? The market rewards those who stay, not because persistence is heroic, but because it's rare. Most traders abandon their journey around month 8. Breakthrough moments often arrive at month 14. Do the calculations. Trading success isn't a gift for the naturally talented. It belongs to those with unwavering determination. Your mission isn't perfection. It's remaining present until perfection becomes achievable. For those who endure, something transformative happens. The experience dividend reveals itself. Veterans perceive trading differently. After extensive screen time, a fundamental shift occurs. You stop seeing mere price movements. You begin understanding the human dynamics driving those movements. This transcends simple chart analysis. It's about recognizing the invisible psychological layers beneath price action. Experienced traders perceive nuances novices miss. They understand where confidence becomes dangerous. They recognize how fear creates opportunities. They comprehend the mechanics of market psychology, how greed constructs market peaks, why hope traps losing traders. With over 1,000 hours of observation, intricate patterns emerge. Morning traders differ from afternoon traders. Their risk tolerances vary. Their time frames diverge. Their reactions to news are distinct. You start perceiving not just what is being traded, but how it's being traded. You learn to read institutional strategies, how they accumulate positions, patient and measured, how they distribute, aggressive and urgent, their preferred moments for triggering stop losses, the predictable retail trader behaviors, FOMO-driven entries at precisely the wrong moments, panicked exits that feed institutional bids. The seemingly obvious trades that consistently fail. This isn't some mystical skill. It's about recognizing patterns through constant repetition. Coaches understand what you miss. Remember Adam and his monthly price spikes followed by crashes. He always blamed market volatility, but his coach saw the underlying issue immediately. You increase your position size after winning trades because your ego has expanded, not because you've improved your trading edge. One simple observation explains 6 months of losses. Experienced coaches can read sizing patterns that reveal trader confidence or fear. They detect exit timing that shows psychological pressure and entry hesitation that exposes underlying doubt. They notice when traders avoid reviewing specific losses, those profitable bad habits that eventually lead to total account destruction. Distance creates clarity, and experience creates that distance. You're building a coach's perspective. You don't need 10 years to develop veteran vision. You need deliberate, focused practice. The key is maintaining a pattern journal that goes beyond simply tracking trades. Track who got trapped. Observe when retail investors bought at market tops. Note when algorithms triggered specific movements. Identify where obvious stop-loss levels got triggered. Understand why seemingly perfect setups failed. Analyze how the market punished widespread consensus. For each significant market move, ask, who's experiencing pain right now? Who's taking profits? What emotion is driving this movement? Where would I be trapped if I entered late? Study your own trading evolution monthly. Review trades from 6 months ago, and you'll be astonished by what you discover. Obvious mistakes you no longer make. Patterns you now recognize instantly. Emotional trades that now seem completely irrational. Progress is invisible on a day-to-day basis, but it accumulates through different levels of market understanding, from basic chart mechanics to deep psychological insights. Each level builds complexity and understanding. You can't skip steps. Every trade, every review, every recognized pattern compounds into what veteran traders call feel. Not mystical intuition, but subconscious pattern recognition derived from thousands of observed data points, with your brain continuously building efficient cognitive shortcuts. Here's the rewritten text for the narrator. Creating an edge in trading requires deep self-reflection and pattern recognition. I decided to practice veteran vision by analyzing 10 trades, examining both winning and losing scenarios. For each trade, I mapped out the participants, identified the underlying emotions driving market movement, and tried to understand what an experienced trader would have perceived that I missed. This exercise was transformative. I began to see beyond mere chart patterns and recognize the human dynamics beneath market actions. I asked myself critical questions. What patterns am I now seeing that were previously invisible? Where am I still interpreting charts as mechanical data instead of human interactions? What insights would my future self 3 years from now recognize that I'm currently overlooking? Time in the market isn't about luck. It's about building a comprehensive pattern library. Every trading day contributes to my database. Each review sharpens my pattern recognition. Every survival adds to my earning wisdom. Veterans don't possess superior strategies. They have developed extraordinary perceptual skills. They see the underlying game behind market movements, a vision earned through persistent engagement. This journey transcends financial transactions. Trading becomes a profound life practice, a philosophical exploration of risk and human nature. It's not merely about monetary gain, but about personal transformation. Trading is philosophy in action. Each trade a meditation on risk, reward, and reality. The market doesn't just test trading strategies, it examines character. Trading mirrors life's deeper patterns. Impulsive market behaviors reflect personal psychological tendencies. Chasing setups from fear of missing out. Cutting winners prematurely. Holding losing positions hoping for reversal. These trading behaviors precisely match life relationship patterns. Mel's personal journey illuminated this profound connection. Her market behaviors revealed her deeper psychological landscape. Her need to control charts mirrored her desire to control relationships. Market FOMO reflected life FOMO. Loss reactions echoed unprocessed past failures. As she healed her trading approach, she simultaneously healed her life perspective. Developing market patience translated into developing life patience. Trading became a form of therapeutic self-discovery, with financial statements as evidence of internal growth. The fundamental lesson, uncertainty is the only true certainty. Markets teach what traditional education cannot, that plans are hypotheses, not guaranteed outcomes. They reveal the complex, unpredictable nature of human experience. Control slips through our fingers like sand. Adaptation becomes our true strength. Even the most carefully planned decision can spiral into unexpected territory. Success isn't about certainty, but about embracing ambiguity. The process matters more than the final result. We learn to evaluate actions by their inherent quality, not just their outcomes. The journey is about finding meaning and discipline, far beyond mere financial gain. Celebrate the progress that remains invisible to others. Trust that time will eventually reveal the deeper truth. Pain isn't an enemy, it's pure information, a lesson markets teach ruthlessly. Losses aren't failures, they're feedback mechanisms. Discomfort signals growth opportunities. Avoiding pain only creates more suffering. Processing pain transforms it into wisdom. Identity isn't fixed, it's fluid. Especially through trading, you discover that you're not defined by your last trade, your account balance, or your winning streak. You are your commitments and your capacity for growth. Presence becomes your most potent weapon. The market demands total attention to the present moment. Release the weight of past trades. Abandon projections about future outcomes. Inhabit completely what is happening now. Trading transforms into a spiritual practice. Some call the market the world's most expensive therapist. It reflects your inner landscape with brutal, uncompromising honesty. The market reveals your greed, your fear, your ego, and your potential for growth. Every day you sit with charts, you're truly sitting with yourself. Each trade becomes a conversation with your edge, both the market's edge and your personal edge. The philosophical framework is simple. Accept what is. The market is always right. Fighting reality only creates suffering. Acceptance enables action. Control what you can. Your preparation, execution, review, and personal growth. Release what you cannot. Market movements, other traders' results, past decisions, future outcomes. Focus on becoming. Ask yourself, who is this trade making me? What quality am I developing? How am I growing through this? Reframe your entire approach. Stop thinking, I trade to make money. Start believing, I trade to master myself. Money becomes a byproduct. Mastery becomes the purpose. And mastery in one domain inevitably bleeds into all areas of life. The patience you build waiting for trading setups helps you wait for life's opportunities. The discipline of following stop-loss orders helps you maintain personal boundaries. The resilience developed through market drawdowns prepares you for life's inevitable valleys. Write your trading philosophy statement. Trade not just to accumulate wealth, but to develop character. Then ask, how does this wisdom apply beyond the charts? I reflect on how trading has become more than just a financial pursuit. It's a profound journey of self-discovery. The markets have become a mirror, revealing my deepest psychological patterns and challenges. Each trade is not just about making money, but about understanding myself, learning to navigate uncertainty, and developing discipline. Trading has transformed how I approach life's challenges. The skills I've developed, managing risk, staying calm under pressure, learning from failures, now extend far beyond the trading screen. My trading rules have become life principles. Assess carefully, have a clear plan, manage risk, stay emotionally balanced, and continuously learn and adapt. The real value isn't in the profits, but in personal growth. Every trade is a practice session for life, teaching me to thrive in unpredictable environments. The markets are my teacher, showing me how to act with precision, handle setbacks, and constantly improve. It's not about conquering external markets, but mastering my internal landscape. The journey is about becoming someone who can navigate uncertainty with grace and resilience. The money is a byproduct. The true wealth is the person I'm becoming. For traders who persist long enough, this becomes clear. The most significant return is personal transformation. Now it's time to turn knowledge into action. The next 90 days will be a systematic implementation of everything learned. This is not philosophy. This is practical, actionable growth. The blueprint begins with a foundation phase spanning the first 30 days. Week 1 focuses on honest self-assessment. I'll install screen recording software, find an accountability partner, and conduct a thorough evaluation of my current trading skills. I'll rate myself in each critical area and identify my 3 biggest gaps, choosing one to prioritize. Week 2 involves creating a comprehensive playbook. I'll document my top trading setup in meticulous detail, including context requirements, entry and exit rules, risk parameters, potential mistakes, and emotional considerations. I'll test this setup thoroughly in replay mode. Week 3 centers on establishing a review system. I'll start daily 10-minute reviews and weekly deep dives. I'll create a process scorecard and begin tracking a specific behavioral metric. Week 4 introduces mental training. I'll install a mental tool, starting with breathing techniques. I'll practice morning visualization, track my physical state, develop a pre-trade ritual, and establish daily non-negotiables. The evolution phase from days 31 to 60 will deepen my practice. I'll expand my playbook, add dimensional analysis, track success by context, and refine rules based on data. I'll review flagged trades on video, identify behavioral patterns, and create targeted interventions. Here's the rewritten text for the narrator. I began sharing my findings with my accountability partner during weeks 9 and 10. My focus was on mastering biology and mapping my nervous system patterns. I installed state check protocols and practiced regulation techniques, carefully tracking the correlation with my results. My daily evolution continued with morning visualization exercises. I observed 5 men who demonstrated breathwork techniques before their trades. Each day, I would review a video of one trade and conduct a process celebration ritual. ritual. This was the integration phase, spanning days 61 to 90, where I aimed to become the system itself. By weeks 11 and 12, I concentrated on identity embodiment. I lived my identity statement, making decisions as my future self. I tracked my identity alignment and course corrected without judgment. During weeks 13 to 14, I developed an advanced mental game. I used full breathe protocols, mastered verbal circuit breakers, and implemented reset rituals to achieve consistent performance in the green zone. Weeks 15 to 16 were about philosophy integration. I applied trading principles to my life, journaling parallel insights, and preparing to share wisdom with others. I committed to a long-term journey of daily mastery. My morning routine became sacred, and I traded only A+ setups. I conducted full review processes and mental training sessions, celebrating even small process wins. I established 90-day success metrics, tracking weekly behavioral patterns. I monitored the percentage of trades from my playbook, average process scores, days with full reviews, and emotional regulation success. I documented growth metrics, identified patterns, made adjustments, and aligned with my desired identity. My weekly rhythm became structured. Mondays for week planning and goal setting, Tuesdays and Thursdays for execution focus, Fridays for weekly review and pattern recognition. Weekends were dedicated to deep study, mental training, and rest. I recognized common 90-day pitfalls, trying to do everything at once, skipping reviews when winning, comparing myself to others, expecting linear progress, and potentially quitting around day 60. My solutions were clear. Focus on one thing per week, make reviews non-negotiable, track only my own progress, embrace the natural waves of improvement, and commit fully to the entire 90-day journey. My daily checklist became my compass, morning identity statement reading, visualization practice, setting an intention for one good trade, mindful trading with breath checks before entries, maintaining process focus over profit, tracking state awareness, and conducting a 10-minute evening review. I celebrated one win each day and set my focus for tomorrow. With conviction, I signed my commitment. I commit to 90 days of process-focused trading. I'll track my progress through behavior, not just profits. I won't give up when challenges arise. I'm committed to becoming a professional trader. My name, this date, total accountability, my partner, our shared journey. Don't wait for perfect conditions. Start this Monday. Imperfect action trumps perfect procrastination. If you work imperfectly but consistently, in 90 days, you'll not only trade better, you'll become better. The market will remain, but the real question is, will you be prepared? Your transformation begins now. Section 15, the final truth. Mastery isn't a destination, but a continuous journey. We've explored systems, psychology, biology, and philosophy. Here's the ultimate insight that connects everything. Trading mastery isn't a point you reach. It's a way of being you practice daily. With every trade, with every review, the market continually teaches because it constantly changes. And you keep learning because you keep growing. This journey never concludes, and that's its true beauty. Consider other disciplines. Musicians don't stop practicing after performing at Carnegie Hall. Athletes don't cease training after winning gold medals. Surgeons don't halt studying after successful operations. Why would traders stop developing after becoming profitable? The game evolves. Markets shift. New patterns emerge. Old advantages fade. But if you've built the foundation we've discussed, self-awareness, process discipline, mental tools, review habits, growth mindset, you won't just survive change. You'll thrive on it. The 3 stages of mastery unfold. Stage 1, years 1 to 2, involves learning the game, building basic competence, developing your edge, surviving drawdowns, finding your style. Stage 2 focuses on playing the game, consistent execution, refined edge, emotional stability, growing capital. Stage 3, 5+ years, means transcending the game. Trading becomes meditation, process becomes art, money becomes a byproduct, teaching becomes purpose. Each stage introduces new challenges, lessons, and opportunities for growth. Masters understand a profound truth. Every loss still teaches. Every win can mislead. Every day demands presence. Every trade is practice. They don't trade to prove anything. They trade to express their edge. They don't need market validation. They validate themselves through process. You are ongoing evolution. As you continue this journey, remember to keep the beginner's mind. Stay curious about markets. Question your assumptions. Learn from everyone. Admit what you don't know. Maintain the professional's discipline. Never abandon process. Always review trades. Keep refining your edge. Respect risk always. Embrace the philosopher's perspective. See beyond process. profit and loss. Find meaning and growth. Share wisdom freely. Stay humble in victory. The community you build matters. Trading can be lonely, but it doesn't have to be. As you grow, you'll find accountability partners become friends. Competitors become colleagues. Students become teachers. The journey becomes shared. Give back what you learn. Teach what you know. Support those behind you. Learn from those ahead. The ultimate success metric will surprise you. Years from now, success won't be measured by your account size. It won't be your win rate. It won't be your famous trades. It won't be your social media following. It will be measured by who you became, what you learned, how you grew, who you helped. The final challenge awaits. After hearing all of this, you have 3 choices. File it away as interesting information. Try a few ideas for a couple weeks, or commit fully to transformation. Only one choice leads to mastery. Your next action matters. Right now, before you move on, choose your starting point. Set your 90-day commitment date. Find your accountability partner. Take the first imperfect action, because the distance between where you are and where you want to be isn't measured in knowledge. It's measured in implementation. The market is waiting. Every day you delay is a day of growth lost. Every excuse is an edge unpracticed. Every tomorrow is a pattern repeated. But every action, however small, is progress. Every review is wisdom gained. Every disciplined trade is identity built. You now have everything you need. Not to be perfect, but to begin. Remember this above all. Trading isn't about conquering the market. It's about conquering yourself. It's not about the money you make. It's about the person you become. It's not about reaching a destination. It's about who you are on the journey. The market will test you, break you, rebuild you, transform you. But only if you stay, only if you practice, only if you grow. Welcome to the real game. The charts are your dojo. The market is your teacher. Every trade is your practice. And mastery is not a place you arrive. It's a way you travel. Now go trade. Not just with knowledge, not just with systems, but with soul. Because in the end, that's what separates those who survive from those who thrive. They didn't just learn to trade. They learned to evolve. And evolution never ends. 10 years from now, you'll either be a statistic who quit or a master who stayed. The choice is made not in a moment of inspiration, but in the daily decisions to show up, to review, to learn, to grow. Make those decisions. Trust the process. Become who you're capable of becoming. The market doesn't care about your dreams, but it rewards those who earn their place through dedication. Earn yours. See you in the arena. Share in the comments what helped you reclaim your strength. Likes and subscriptions help our channel grow.